Hi traders, welcome to our market update. Well, it's been a while, right? Sorry for this delay. It was a lot of going on. I will cover it with this update and we will talk a little bit deeper about what's going on the market, how is the market behaving, how is Bitcoin against the broad market behaving, and what also happened in the last few days. So let's go over it. Firstly, I'm recording this market update one day after the biggest one-day liquidation in crypto history. There were so many trading subjects who were completely wiped out of the market because they were so heavily in meme coins, they were so heavily in low value projects, or they even trusted that they could be investing into crypto over the long term. You already know that it's nonsense. You already know that you can maybe hold Bitcoin over the long term, maybe a few other coins, but it has nothing to do with what's investing about. It's not about catching value over the long term as it is possible on stocks. Crypto is really different animal, and let's look at it a little bit more. This is equally weighted index of top 50 biggest coins on Binance. Doesn't matter that much if it is top 50 or all tradable universe, the characteristics is more or less the same. But you know that we are trading on top of top 50 biggest coins. And this is the performance since the official start, more or less, of our service. Well, you can see that the index is very close to zero. Plus, we are not adding trading fees, which means that this index is non-tradable, because whenever we would start adding trading fees, we would be well below 0%. In fact, we would be in a drawdown. Very different compared to Bitcoin performance. That's why I think it is very important to show this index, because of course you want to be in these smaller coins, especially if you will get back to this type of environment. And it doesn't matter if this type of environment will be to the long side or to the short side, because you know that even now, as the market finally started picking some momentum to the short side, we are also making some new profits thanks to our momentum short strategies. So this is the performance of the whole crypto market or Binance futures market in last 1.5 years. What's also more important is that this index is right now in a drawdown of 65%, more or less. 65% from this top. This is where we are right now. Huge drawdown. Crypto market is really very weak these days. We don't know if it will be continuing or if it will be changed very quickly. It's just what trading is about. It's giving us the advantage that we don't need to guess, because I don't know if you remember, but on the last market update, when I was sitting here and we were talking about Trump election, and that I'm very positive to how market could behave in this year and maybe next few years, I was talking about that, yeah, probably we could be at the start of some bigger bull market. And that's something I really believe in over the long term. But of course, over the short term, and over the short term, I mean in a month, we simply don't know. Crypto is too volatile to guess. And the ones who are guessing and betting on guesses only are wiped out basically these days. Really, many lost everything. This is pretty nice chart, because in this chart you can see the difference between Bitcoin performance and again the broader market altcoin performance. Bitcoin is positive plus minus 15%. On the other hand, the broad crypto market is minus 30 something percent. Big drawdown again. And the main reason probably is that there is not enough power from new buyers, that there is basically very weak environment. We can see it even on stocks these days. Stocks are also getting a little bit more volatile. The trendiness is getting smaller, and maybe we could see some shakeouts. Who knows? I'm really not good at predicting. That's why I'm trading. So I was thinking about how to give you some more new information, because we were covering a lot in the past market updates. But I always want you to give you as much information as possible to understand what we are doing. So we made a decision that we would show you the performance of some of the strategies you are trading in the portfolios compared to this equally weighted index on which we are trading our strategies. So let's dig a little bit deeper on it. Firstly, let's start with two examples of long strategies which you are trading. One of them is trend catcher. This is the blue one. And the second one is puncher. This is the yellow one. And what's the difference between these two strategies? Trend catcher is long-term momentum type of strategy, which means that it is catching longer-term trends on the market. And when this strategy excels a lot, well, especially in strong bull markets, really, whenever there is very strong momentum and this momentum is in the market for longer time. We can see it, for example, here in the last quarter of 23, first quarter of 24. You can see how much trend catcher got out of the market in terms of performance. It was basically catching the whole momentum to the long side, and it was profiting from it a lot. On the other hand, whenever the market is really sideways or only with low momentum, like for example in this phase, you can see that yeah, it is making money, but it is also giving back some of the open profits. Why? Because we have to keep the market breathing as long as we want to catch these long trends. And that's what this strategy is doing. That's why, for example, right now it is losing, because the market was more or less going through sideways, then a little bit of upwards just to get back. And this is basically the period in which this kind of strategy is losing money. That's what it is. We want to have it in the portfolio, because whenever we would get into this type of environment again, and we just don't know when, this strategy is really money maker. On the other hand, we also have shorter term momentum strategies. It means that it is catching momentum which is anywhere between 1 to 3 days. Its advantage is that it's much more defensive. You can see it here. Yeah, we made money in the same period as trend catcher, much less on the other hand, like 40% less, more or less. On the other hand, it's much more defensive whenever the market is going sideways. You can see that the difference in a drawdown of puncher and trend catcher is huge. Why? Simply because we are catching just short-term movements. Let's think that the market is in some sideways stage and there is some breakout. So puncher, this short-term momentum strategy, is catching only this initial phase. But trend catcher is specializing on catching long-term trends. And that's why it's speculating that the trend would continue over the long term. If not, we can give back all of the open profits and even more, as the market is correcting very quickly. So this is the reason why we want to keep both of these approaches in the portfolio. And of course, we don't have only these two strategies to the long side, but these are the two main ones, the two main momentum type of approaches to the long side. Then let's look at mean reversion long strategies. Completely different story. Once again, this is momentum and this is mean reversion. You can see that because it is speculating to the long side, it is catching also some of the profits as the market is growing. On the other hand, it's also able to catch some of the profits whenever the market is very, very volatile, because we are basically trying to catch these bottoms and speculate in 1 or 2 days that the market would mean revert back somewhere to the mean. That's what mean reversion type of strategy is about. But on the other hand, we do have two different kind of mean reversion long strategies again. One of them is catching correction to the trend. Anytime the market is in a trend, we are catching these corrections and we are speculating that the market would continue making this type of mean reversion in the trend or to the momentum. On the other hand, we also have more defensive type of mean reversion strategies, which are really catching extremes. The difference is here. Dip Hunter is really catching big extremes. That's why here it is making much less money. On the other hand, here it is very defensive. It's basically going only sideways. But here, as the market fell a lot, and it gave the opportunity to catch much, much deeper mean reversion type of movement, Dip Hunter went to the market and traded it, and we make some new profits thanks to this strategy. On the other hand, you can see that Bargain Hunter is more or less stable and it didn't catch anything. So again, similar approach, but slightly different. Thanks to different kind of trading, we are getting less correlated results and the portfolio is more stable over the long term. This is also a longer view on mean reversion long strategies on Dip Hunter and Bargain Hunter. You can see the stability. Basically, everything is about the stability. Both of these strategies are traded since September, so they are behaving more or less the same as on the in-sample data. Now, mean reversion short. Well, mean reversion short is very interesting because if I would show you this type of equity curve, would you trade it? Is it even interesting to trade? Well, depends, right? We wouldn't trade it as a single strategy, but we are portfolio traders. We are trading huge portfolios of different strategies. And this strategy performance in last 1.5 year since basically start of the service is this. Not that good. On the other hand, it's making money exactly in phases when we need it to make money. That's why it's important to keep it in the portfolio. On the other hand, if we look at a little bit longer story, since April, for example, 23, to see some bigger fall on this top 50 index, you can see that this type of strategy is thriving. Again, the same here. Between the first quarter 24 and last quarter 23, there was a dip on the broader index of cryptocurrencies, and this type of strategy was making money. Again, there is a dip, and this type of strategy is making money. That's the reason we also keep mean reversion short type of strategies, although it's definitely not the biggest money maker, but it is giving different kind of results, and we can reuse the capital for pump popper from another mean reversion long strategies. So we are allocating much more effectively. and this is a much longer term performance since January 2022. Again, we have to think about longer term performance. We never ever can think about few months, maybe even about 1 year, especially if we are talking about single strategy performance. And you can see how much it was making during the fall in 22 and even during the fall in 23. So this is the strategy we also want to have in the portfolio. So these were some hints. These were some other eye-opener why we are building the portfolio, how we are building it. Yeah, the market was tough to trade last few months. It is tough to trade even for last 9 months, especially with the all-weather portfolio which we are trading together, because the portfolio is having quite a few long-term momentum strategies like trend catcher. You already know that these strategies are really printing money whenever there are strong trends in the market. We just have to be patient. On the other hand, we have also realized that trading this type of portfolio is not for everyone. That's why we will give more information in the next market update about different kind of portfolios you would be able to trade if you would want. You would be even able to trade on Bitcoin or Ethereum as a collateral. Basically all the information, everything we have learned when trading institutional clients, we want to push down to our retail clients too, and really offer the best solutions we have seen on the market so far. One more news, you know that I've teach a course on the university, and I had quite a few requests to record it in English and sell it to others from some of my followers. That's why I did it. I recorded this course. I always encourage our clients to get the highest possible education in trading as possible. That's why we made a decision that for all of you who are trading with us as our paid clients, we will offer you 50% down of the course. So if you are interested in it, please write me back and we will send you a coupon just for you. We are not offering it in general, just for you, our paid clients, and you can look at it and you can learn something new about how we are building strategies. You can dig a little bit deeper on strategy building, on the basic sound ideas based on which we are building the strategies, and you can again get a little bit more of how we are approaching the strategy building. There are 8 different kind of strategies, different portfolios. There are even data of crypto for those of you who would want to start testing some of the ideas by yourself. Okay, thank you. The next update will be definitely sooner than the last one, and we will give you a lot of new information regarding the possible tradable portfolios. Thank you and have a great day. Bye.